Alright, so here's the deal. Most people, there becomes a point, and I'm going to assume before I say this that everyone watching this video is either currently studying Al or has studied Al Brooks. And if you haven't, watch this video and click on it and go to his website and read and look into him. I have them post, I believe you can find it in the disclaimer part I write on all these videos, or to keep it even easier, just go to my channel, click about, and you'll see his websites. I don't make anything from him, never even spoken now. And if I ever get the chance to, I'll certainly jump at it. That is, if I get the chance to one day sit down and talk with him, I think I'd love the opportunity. But, I respect the type of person he is, and, he's a discreet person. He just likes to kind of do his own thing and live his life, and I respect that. Anyways, I believe this is the number one reason why traders lose money, and the number one reason that stops them from becoming profitable consistently over time. And I'm sure some people can, you might have a few outliers in this case that were able to achieve it. But here's the deal. I think there becomes a point in time when, let's say, make up a person's name. Let's say John or Jim or whoever is, Sally. They're studying Al Brooks and they're studying his information. Eventually they're going to start to learn his stuff. They're going to know that here's a breakout and follow through. I should sell, and if I sell, I'll probably make money. They realize that, and the issue is they never trade small enough. They're always worried about risk, and because of that, it causes them to not trade the way they know how to trade. And I've had many videos recently about that. So that's the first thing. Right now, this is the Australian dollar Japanese yen. For the ticker symbol for TradeStation, it's AUDJPY. And right over here is December the 5th at, it looks like 4 o'clock in the afternoon. Or I'm sorry, 2 o'clock in the afternoon in here. So this is, 9 a.m., 12 p.m. Central Time. This is 7 a.m. Pacific Time. So here's the thing. If people would start out trading smaller, I think they will significantly be more consistent and, quite frankly, just do better and become more profitable quicker. And the reason for that is simple, And for this video, I'm going to pretend that, let's use me as an example. So I'm learning how to trade, and let's say I don't have, I feel like I'm ready to go live, and I don't have, I can't trade stocks. I don't have $25,000 to open an account. So, and this is a hypothetical situation. So what do? Well, I have really two choices. I can trade the E-mini, or I can trade Forex. Let's start with the E-mini. Well, here's the E-mini. And the number one issue with the E-mini is, here's the number one issue. It should be pretty obvious. H bar is about 1 point, which means every bar is $50. $50. In my eyes, I'm trading one contract, and I'm gonna naturally look for stuff like this, these very small bars, because I want to limit my risk. And, when I see a bar like this, and normally I'd be thinking, gee, that's a breakout, and follow through. Al says we should at least get a little more up, so I should buy. Well, I also know that, my stop, I can't put my stop down here. That's crazy. That'd be risking 41 to 35. That's risking 6 points. I can't do that. That's just crazy. So I won't take the trade. And then I will, I'll end up buying above this bar and getting out below here, and I'll get chewed up. And, this is all, if you want to listen to Al's spiel about this or discussion, there's a YouTube video on Futures.io. I'll try and remember and post it. I will try and remember to post it in the comment section, but if I forget, just please comment on this video and say, hey, where's that video where Al talked about managing, losing on winning trades? Just say, hey, where's that losing on winning trades video? He did a webinar recently, so comment about that and remind me, and I'll be sure and put it and post it. But people lose because they don't trade small, and if they would trade small, they'll make money. So let's go back to these two options. So we've already discussed one. I'm obviously going to be terrified of taking the right trades, the good trades. I'm going to look at this and say, I can't buy this. My stop is all the way down here. I'm going to sell. Okay, I'm going to get stopped out. Or, maybe I'm smart. Maybe I still say, well, I know this sell's bad. I'm going to skip through this. And then I see this and I go, hey, I just can't get in. I can't get in. The risk is too much. I don't want to lose. And, 10, 12 points later, I'm still not in. And maybe I say, okay, I got to get long, and I buy and put my stop down here. Well, this time, maybe I get lucky, and I don't get stopped out. But my point is, because to me the risk was so big, and I could not trade smaller, I missed this entire rally. As opposed to, I talked about this in my prior video, just buy one, as opposed to just buying my smallest position possible and at least making something, I made nothing. So let's look at Forex. So I can't trade the E-mini, so I'm going to trade Forex. And the beautiful thing about it is I can trade whatever position I want. So I'm going to, just to help me out, because I'm not completely familiar with the pip values on the units. Here's my little pip calculator, and this is the Australian dollar versus the Japanese yen. So what I'm going to do is, let's say, let's make it even, let's take this approach. Let's also say I work from 8:30 to 5, or, I work a normal time, schedule, so I don't have time to trade during the day. It's just not possible. So what do? Well, maybe I've got time at 7 or 6 o'clock at night, 7 o'clock, 8 o'clock at night. There's always time. We live in a 24-hour market. So look right here. If I look at this chart, there's one thing I'm thinking. I'm thinking, yeah, this sell-off was, it was strong. This rally looks, it's disappointing for the bears, but, the stop's up here. So technically speaking, the bears can sell for any reason. They sell below here and put their stop up here at a minimum, or up here. And that's the reality. I want to see some. I'm kind of curious to know. Okay, that worked. Oh, look at that. Here's where I'm getting at, by the way. I know I'm kind of jumping ahead, but you have a second entry short, looks like a bear flag. Theoretically, the minimum stop is right here. So if I sell below, my stop's up here. There's 1 times my initial risk, and here's 2 times my actual risk. And this goes into being able to trade small. My probability is really good if I do that, as opposed to selling below, stop a few ticks above, and look what happens. I get stopped out only to watch price sell off. And then I go through the classic, gosh, I'm an idiot. Why didn't I just use the right stop? I knew the stop was up here. And then I just watch this fall down. So anyways, let's back up though, because, I get it, that's a long time to wait. Let's say you're at work, you get home from work, and you say, okay, I'm gonna trade for a few hours. So I've opened a Forex account, I'm trading really small. I've only got $3,000 in a trading account. And I don't want to say that, we'll say 5,000. I just like I like 5, I think it's a better number. Okay. So I've opened up a Forex account with $5,000 in it, whatever number. Well, I'm going to trade small, and I'm going to trade really, really small and just get practicing. So at some point, I know it's probably still always in short. I see, bear breakout. Follow through. Gee, if I sell and put my stop up here, I'll probably make money. Okay, so sorry I had to pause for a minute. But anyways, we look at this, we know we're going lower, we know this is the low of the day. And we've got 2 choices. Stop up here, preferably up here or up here. So think about it. If I sell this close, my stop is at 84, 87. Up here it's 85.05, so that's, can't even think right now. Maybe that was it. Yeah, okay, so that's about 18 ticks. So, if we were going to risk a full size lot, or a normal size lot, I guess, of 100,000 units, that would be about $8.5 times, we'll just say 20 ticks, $170. And maybe you're thinking, well, gee, which that stop's probably okay. And maybe we're thinking, okay, well, I just feel better if I traded, a little smaller than that. Okay, so we'll risk 50,000 units, and that's 4.33 units, $4.33 per pip. So, and maybe you say, okay, I'll put my stop all the way up here. So instead of risking, 20 pips, we'll risk, it's about, we'll say 25, 26 pips, whatever that number is, doesn't really matter. Okay, that's $112, and you're thinking, okay, my stop, I'll sell this close, my stop's all the way up here, that's $112 away, that's pretty small, I can do that. So, we're short, stop up here, and we think, okay, I want to look, maybe I'll take, each bar is about 10 cents, so maybe I'll take part off at, 10 cents lower, or a measured move down. Let's just say, okay, I'm not really sure, so I'll take targets, right? I'll take profits at a measured move down, which is about, 15 ticks lower, 15 pips lower. And we just got filled. So we take half off at 15 pips. So we'll take 25,000 units off at 2.17. So that's $32. And just to quickly review that, we sold 50,000 units with the stop up here. We scalped out part at a measured move based upon these bars. We scalped out part, which was around 15 pips. So 15 times 2.17 is about 32 about $32. So now our stop's up here. We're long 25,000 units. And we say, okay, we're just going to swing the balance. No reason to get out. And we're still short. Do we get out? Maybe, but probably a minor reversal. And price going up, and we think, you know what? I think we're going lower. I think we're going to test this high. Maybe you sell in here, but let's just say you don't. Let's don't complicate it. Probably not the low of the day. Maybe a triangle, a double bottom. Bear breakout. But when we see this bear breakout, we've gone sideways for a while. We've got this trading range, so we may test up back up to the signal bar. But I don't want to. That's a lot to think about. Let's just think about from here over. Bear breakout. The stop's still up here, but look at this tail. We closed well above these lows, so bulls clearly bought, bears clearly took profits. So I want to see what the next bar looks like. Okay, and now I'm thinking, you know what? We might go a little lower, big tail. Maybe we get out here, or maybe we wait for one bear bar. Okay, but for that's an II setup, double bottom. I think it's reasonable to take profits here. And if we did, we'll notice that we made around another 15 pips. So you basically made around $65. And I know what you're thinking, that's not a lot. Well, you're right, but you made $65. And let's back that up for a minute. So, let's think about this. Let's take that same trade, and this time let's do 100,000 units starting comp. Now we have so we basically made, 30 pips times, I'll just show it, but I know it's about 8.6, so we'll just say $8.5. Look at that. Now we made $255 total, and that's the exact same thing as we did before, with just more volume. We sold this close stop up here to 15 pips, on our first, which was 15 pips of 50,000 units, and then we got out here at another 15 pips at 50,000 units, totaling $255. Well, if you make $255 every day and just increase the volume, you're going to do okay. So let's look over here, and just for fun, we'll do 500,000 units. Make it fun for yourself. Oops. So again, same process. We're going to make 500,000 units. We're going to buy back 250,000 right here at 15 cents. And we're going to buy back another 250,000 at 15 cents again. So that's going to be 30 pips total times $43. Whoa, I messed that up. $43 times 30 pips. You made $1,200 on that trade. So, now you're getting somewhere. And that is the best way to trade. Let's look right here. Maybe you say, okay, well, I've got time during the day. I can get my work done and I can trade at the same time as long as I'm, diligent with what I'm doing. Let's take the same process. So let's just say, pick a place. Let's say we're up at 6 a.m. in the morning. Maybe you live in New York and it's really 7 a.m. But anyways, let's say we're up here and you say, okay, the market's always in long, I'll just buy small, put my stop here. Well, 78 to 99. That's about 20 pips risk. So pull out the good old pip calculator. We're trading small, so maybe we're trading 50,000 units. $86. So that's certainly not much. And you can even trade smaller than that. But let's just say we're trading 50,000 units, and we're going to take 25,000 off, and 20 cents higher. So we buy this close at 98 even, and we're going to take profits at 85.18, and basically right here. So we make 20 cents profit at 25,000 units. So that's like 2.13, something like that, times 20. That's $42. Then we're going to hold, and maybe if we really want to be aggressive, we buy the position we scalped out here, because we move our stop, we'll add on, scalp out again. And at some point you get out down here, let's say you say, oh, bear breakout, that's enough to make me think possible endless pullback, I'm going to get out. Well, let's look at that. 34 to 15. So that's about, let's say we made 34 pips on the other trade. So $72. So what I say, 72 and 48, $120. That's my point. Trading's all about scaling out and taking little pieces. So let's just find some other stuff. Let's look at this bar. Big breakout bar. Why don't we get followed through? Well, let's look to the left. First thing, when I look and see this, I think to myself, lots of trading range price action. Looks like leg 1, leg 2. I'm sure it was. So it probably started, the most obvious is probably right here. And strongly above, big tail, another tail, number 10, and just kind of pulled back. So, but what's interesting about this is, theoretically, now technically, if you did not put your stop lower than this, you would have been stopped out with the spread, most likely. But you could see you had a chance to get out of break even, and even over here, So let's say, well, I'll take that back actually, because you actually would have bought this close, bought more above a bull bar. So you bought above these two bull bars. Look what happened, This is not good for the bulls. And, they basically got out. But anyways. Here's another good example. This is, for me, it's 1 in the morning, so rather late, but you sell, put your stop up here, trade small. When in doubt, go for a measured move. You would have made it. Or, maybe you say, I'm disappointed by this. I think we'll get a second leg. We got our second leg. So 3 bars down, bad follow through, tails on bottom. Just take your profit. Stop up here. Maybe you add on, sell off again. Best looking bear bars, 3 pushes down. Once you get 3, 4, 5 bear bars, just buy back your shorts. Interestingly enough, you sell more lower, you get out break even. If you sold below here, you had to wait all the way here to get out break even. But I don't think that's a good short. I think this channel up's too tight. So, to me, if anything, you're selling. If I wouldn't do this, but if you sell this close and you wait and you sell more below bear bar, I really don't like doing those kinds of trades. And for me, if you watched Al's webinar the other day, you heard him mention, if you sell, that these bull bars, at some point, this bar, pick a bar, it just makes more sense to buy back your shorts and go long for at least a scalp. Look right here. I could buy back my shorts. I'm actually interested to see this. Yeah, okay, so at this point, I could buy back my short. If I take profits here, I'm going to break even. In other words, the short, I lost money from selling this close and exiting here. But if I go long here and get out above this area, I will actually make a very small profit from both those trades. What I mean by that is I'll take the loss and I'll make up for the loss. So there you have it. Just side note, just stuff when I'm looking at this chart, I'll just point out a few things. So bull breakout, clearly always in long. This is one of those trades where the bull, I got to kind of just work it out to describe it. So in essence, you buy this close, you buy maybe above here. The whole point is you buy this close, stop down here. Now, if I'm trading Forex, I'd put my stop I don't know what the spread is on TradeStation. I really don't trade Forex right now, but I'm planning to very, very soon. Right now, I'm just trading stocks right now, but Forex is kind of my next transition point, if you will, and I'm very excited for that. But anyways, but I mean, I have traded. I understand enough of Forex, and I have traded it before. Anyways, I don't want to get all in detail about that, but if you buy here, depending on what the spread is, price could touch this low and technically stop you out. So I put my stop, a little bit away, somewhere down here. But you buy, and you just look to buy, preferably at least halfway to your stop. That's one thing Al talks about. So a goal would be to at least, let's say the spread's 2 points or two pips. 18. It's not 18. Okay, it's a little far. So maybe we'll do something like that. Okay. So at a minimum, I want to buy at least halfway from my stop. If not, so somewhere below, I want to buy somewhere below this blue line, preferably. And if I did, I would have made money. So for me, when I see this big bull bar, if I bought it, my biggest concern would be the high close of the day. And when I see bear bar, another bear bar, another bear bar, this, I'm thinking, this is not good. And, you got to get out. And certainly, I'd get out on this bar, just take the loss. And if I'm quick, I'd try and go short. Bear bar, another bear bar, another bear bar. Doesn't matter, just sell. Sell this bar, stop up here. And because you have trap bulls, and you'll probably get some sort of, the first target was this low. We reversed up. I want to see if you bought this low at 22. Okay, so bulls did not make money buying this low for a 10 pip scalp. So my next thought is, okay, can they, will we go for a measured move down? And look what happened. We did. Almost looks like we went a pip or so below. It turned up. And, we did close the gap. So 15.05. Yeah. So we can clearly see that bulls are buying 10 to 20 pips below, scalping out. Bears are selling. They're buying back shorts, 10 to 20 pips below. Bulls are going long. And the gaps are closing. So if I buy 15 pips or 10 pips below this low, I'm probably going to do okay. And here is 86 right here. And, it did go another 10 pips lower, but, anyways. So this is just a few little random thoughts at this moment. This is kind of honestly just me thinking aloud. Bull breakout, it doesn't matter. When I look at that, the only thing I'm thinking is this. If for me, always ends a great way to structure. If I had what to do in the market, when I look at this, I'm thinking, it's very close to neutral, but if I had to swing in any direction, I'd pick long, because I see a bull breakout sideways, another breakout sideways, and the bears really haven't done anything comparable. But this is pretty far to the left, so it's close to 50-50. So you certainly no need to hold long through this. But then I see bull bar, and minimum follow through for the bulls. Another bull bar. Big doji, another bull bar. So we're reestablishing always in. Then I see a bigger bull bar, so clearly always in. So my thoughts just, if I can't make up my mind, just buy the market. Buy a half size position. Put my stop down here. And, maybe I'll take, this bar is 15 pips tall, so maybe I'll take partial profits at 20 pips. So I got in at, let me double check that. Yeah, okay. Got in at about 16 pips, so we'll take profits at 36 pips. Again, probably not going to be the high of the day, so I'd still hold long. If anything, I'd buy more. Starting to go sideways. Look what happened. So we just made 20 pips. Where's my stop? It's still down here. Maybe here, but down here. To me, it's not strong enough yet. Getting stronger. Okay, now clearly stop down here. Holding long. Maybe so I'm long a half position. If I took partial profits over here, I'll just hold the rest, and I'll say, okay, big tail. So I think it's okay to take partial profits here or get out, but even if I didn't, maybe I'd just say, okay, you know what? I'll look to add on. So I'll put my full position on here, stop down here. 3 bear bars, but tail on the bottom, high 1. Looks like we're going sideways, maybe forming a triangle, maybe trying to close this gap. High 2 buy, high 3 buy, wedge bottom, really doesn't matter, I think, So let's say I buy above that bar and I put my stop down here, assuming my risk getting big. That's okay. 3 pushes down. Bears trying to get their bear breakout, and they failed. So if I didn't buy up here, maybe I buy more here. And the reality is, when you look at this, that's it's a lot of trading range price action. So it's not a great buy. It's okay to buy, but your stop's down here. and you've got trap bulls here. Here's your problem. At this point, I think the markets is always kind of interesting, So what do? Well, you can always buy more, put your stop down here, but again, this may look like a trading range. So if anything, I just hold long, and you get a bull bar, and then we're starting to rally, trying to go sideways, trying to form a bottom, but we may get stopped out close. And again, this is the problem with Forex. That's why you put I'd use it, stop a few pips away for the spread, because technically if you put your stop 1 pip below, you would have been stopped out. But this looks like a tight channel, maybe an endless pullback, and then look what happened. So it's interesting how that happens, And at this point, I'm thinking, this was a long. I'm very disappointed. 51 bars. I'm happy to get out up here, and I'm thinking, okay, I'm getting out. I'm sufficiently disappointed. The bulls just are not doing enough. I'm out. And then I see bear bar, another bear bar. Okay, sell at the market. Small position, stop up here. Take partial profits, maybe 20 cents lower. If we're lucky, maybe we're going to get a measure move down from the double top. I wouldn't buy this strong enough for a second leg down. More down, but starting to get tails. Wedge bottom, 1, 2, 3, 1, 2, 3, but still probably strong enough second leg down. I think we'll close this gap though. So okay to take profits and sell up here. Okay to hold short, stop up here. Are we always in long? Maybe, but I think the bulls really need one more bar, because bears are going to sell up here. And they're starting to sell. So holding short, big bear breakout. Another bear breakout. We're at my target. Maybe the target was here. Another bear breakout. Okay, we're at my target again. So getting climactic, stops far away. We're down here, back into this trading range area. So I'm thinking about, okay, I probably should take profits. Bulls, they bought 20 cents below this low, or 20 pips. They'll probably buy 20 pips lower. I'm going to take full profits here. And if I didn't, 4 bear bars, I'm going to take full profits now. And if I'm willing, I'm going to go long, small position, maybe go long here. And if I think there'll be a deep pullback, I'll trade small, trade half size, and look to buy a 50% pullback. I may never get it. And in this case, I think you're better off scalping, but I don't want to go into that. Just take little pieces. But anyways, if you bought in here, clearly enough to scalp. Another bull breakout. But again, bulls are buying the sell-off. So, I think we're going to test down. I think, I'd probably get out below here. Bear breakout, but probably strong enough for a second leg. But again, sufficient, very disappointed bears, and we may not get that. This may be all we get. Tested the bottom, starting to go sideways. I think bulls are buying. Stop down here. Okay, and then like I said, bulls are buying, but I think we're developing a trading range. Consecutive bars, and just going sideways. So clearly more sideways. Then we sold off. All right. Hope this video finds you value in some form. If it does, awesome. Comment. Let me know what's helpful with these videos, and let me know what's maybe a distraction, or a way I can make these videos better. And just let me know if there's something you want me to talk about. perhaps more of, or give more of my opinion on something. So yeah, thanks for watching.